And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this now cloudy and windy, I think, Wednesday. I hope you all had a great start into the new week, despite the market dump that happened on Monday. As always, in Daily Market Mastery, we're going to take a quick peek at my portfolio, the positions I'm currently holding, where I think certain stocks and assets are moving, and if so, what kind of adjustments I plan to make. Before we do that, as always as well, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And last but not least, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and so on, everything's linked in the description down below. And the one thing I recommend if you are interested is to check out the Elliott Wave Principle, which you can read online for free when you follow the link in the description below, or get yourself a physical copy. And with that, we'll jump to my screen here. Hi, Olga, great to have you here. I, in quotes, missed you yesterday, but I quickly want to circle back to something that we talked about last week and where I mentioned, so we talked about the stock yield enhancement program, in case you for sure remember, your memory is great, yeah? And I told you I will look into it on the weekend, and I actually did a little bit. And while I think we have a situation where we are both right to some extent, so there is the theoretical event or the theoretical risk, the unlikely event that the stocks are not returned to the user, yeah. However, there is also apparently the requirement why under SEC rules, whether the question would be if that applies also to users in Europe. I haven't had the time to dig further there. I assume there is a similar case there. So this is why under SEC rules, IBKR must provide you with treasury or cash collateral in the same amount as the value of your shares to protect you. So that still leaves two questions open. I'm actually going to switch camera real quick. So that still leaves two questions open in that case, in my opinion. So question number one, does this also apply for users that are using the UK branch of Interactive Broker or Ireland or wherever they are registered right now? So users from Europe and other countries. And B, do you only get the cash or treasuries compensation at the current value? So if they borrow my shares for, let's say, $1,000, I get $1,000. But if then the price shoots up and they would be worth 2,000, do I still only get the 1,000, or would that compensate for the 2,000? Yeah, I haven't had the time to dig into that. But so while there is the risk, as you pointed out, and thanks for bringing it up last week, of, in quotes, losing the shares, I mean, I really consider it unlikely in most cases, but the risk still is there. And there is some kind of protection. I still have to find the time to dig deeper into it to answer the other two questions. And also you asked how much it pays or so. Yesterday, actually, if you check out the beginning of the stream, I actually covered the same thing that I just covered right now. But yesterday, I also had a notification that said that I made €36 or 36 US dollars, yeah, which is obviously not a lot, considering the portfolio holds a little bit more than 10,000. So it's like 0 point something percent. But and the notification didn't mention the time frame. Would have to check. We can actually check. Yeah, I can actually check the report for last month. Account management home. So just a second. I'm gonna open it up. Gonna switch back here. Performance and report statements. Busy with Lumen. Yeah, no problem at all. I mean, I'm happy every day you show up, and obviously I understand that sometimes other things are more important or just come in between. Now we have July, so let's check for June, and then let's duplicate that. So that's the June statement, and stock yield enhancement program is usually somewhere at the bottom. Broker fees, do we see? That's just the collateral borrowed. So in June, it was an astonishing $2 or €2.62. And for July, we don't have a monthly report yet, so probably gives an error. No, it doesn't. Okay, so Okay, so for July, yeah. Oh, wait, what, May, June? Yeah, July was the last month. I'm an idiot. Yeah, so it's 32.92 euro. So it's obviously not a fortune, but it adds 0 point something percent to the portfolio's return. So really nothing that will make me rich or poor, but still something that makes a small difference. Now, if it would be every month like that, yeah, don't spend it all at once. I know, yeah, like, so it lasts longer. No, but I mean, if you consider if it's every month like that, I mean, it always depends on the portfolio size. On a 10,000 euro portfolio, I think getting an extra 0.2, 0.3% every month, potentially, it obviously depends also on the stocks and the interest and so on, still sums up a little bit. Obviously, doesn't help if the portfolio then looks like this, yeah, with a few positions that just went deeply south. Although thankfully none of them are too big. But yeah, and with that, I think, have that covered since you're here, and I wanted to just make sure that you see it, and that you also see that I actually followed through on my statement last week that I will look into it. I still, as mentioned, have to look into it further, but at the moment I have like just so many things on my to-do list. And with that, where do we start today? Let's actually start. There is some notification for Chewy. Okay. Or alert. Chewy crossed 23. Why does this matter? When did it cross? Oh, here, briefly. Yeah, okay. So Chewy might be, we turned around on the 78.6 retracement, and Chewy might be on the way up from here again. We don't turn around nicely on one of those extension levels, but we hit the minimum target to make this a potential wave A, B, C. So for impulse, corrective wave, and followed by next impulse. I'd say for Chewy, the best thing, or the thing to do here would be to wait to potentially break this line here. And if that happens, then I'd consider it like an extra confirmation that this might indeed be A, B, C, and we might be indeed in the next impulsive wave up. Now, clear the alert history. And just a second. Just need to do something on my other screen real quick. Okay, boop. And then that, and that, and that. Yes, there we go. There we go. And then here, okay, Chewy. Then let's start with GameStop. Although, yeah, we're now on a daily chart. So as that, based on the decline we had here, so I got it wrong. I mean, obviously I got it wrong that I thought that we already have the beginning of the impulse wave up here, and that therefore there might be wave 2, and then we get wave 3, 4, 5. But it's more likely that basically we have our impulse wave till here and are currently correcting that entire pattern. And then we have our wave 1 or wave A down here, A, B, C for wave B, and are now in wave C down. It's possible that we already finished 5 waves down here and are going up from here. However, I consider it more likely that our wave C will terminate around $15. So the minimum target for wave C, which is not a guaranteed and set in stone target that we always have to reach, but which is simply a most probable target based on like previous experience, is around $15.13. And at the same time, we have one of the usual turnaround levels, the 78.6 retracement level at $14.99. So I think that's gonna be the point where it turns around. Again, it's possible that the correction here already is done and we go up from here, but from the looks of it, that's kind of like visually the only situation where this pattern would make sense to me. It's always the hardest part in Elliott Wave Theory are the damn corrective patterns, because they always can subdivide in combinations of patterns and are not always as clear to label. There are sometimes situations where they are super straightforward and super easy to spot, and then there are situations where it's just, yeah, either you see it or you don't. So GameStop's gonna be like a waiting position again, most likely. I'm gonna continue to sell my weekly covered calls, in this case at the 30 strike price, the price we got them assigned. Now theoretically, as I mentioned in previous streams, my average, if we consider the premium that I got paid for those options, would actually be around 24, and if we consider the premium that I earned overall, it would actually be somewhere at 17 or 16 or even lower. However, that would mean if I write options with a lower strike price that I'm technically willing to give back premium that I earned from previous options, and I don't want to do that. So I rather take the smaller weekly payout of, in this week, like $75 roughly, instead of risking that we have a surprise upwards movement because maybe the correction is done here, it's at, and then suddenly basically giving a lot of money back, in quotes. Long term, I'm still bullish. So while it's a little bit frustrating to, in quotes, hold the shares and be limited to selling the calls for, as I said, $50 to $100 premium right now, maybe a little less, even if the price declines further. Long term, it still shouldn't matter. And if I'm right, and my bullish assessment that we will eventually see another impulsive wave up is right, then every dollar we earn selling, or every dollar I earn selling covered calls down here, actually just makes the overall trade more profitable, or increases the overall profit. With that, we have GameStop. Now, before we circle and move on to the next, we're gonna open up the activity report for the last 2 days real quick to check how the lending and short interest or stock yield enhancement program changed. So there's one for yesterday and then one for the day before. So just a second. And for the day before, their view. So that's the one for the day before, and that's for yesterday. So stock yield enhancement program. There we have it. Stock yield enhancement program. Where are you? There we have it. Okay, so we had Green Wave costs and SunPower lent out at 60, 46, and 46%, and Green Wave costs SunPower at 60, 46, and 50%. So percentage didn't change much. Number of shares 260, 80, 200. Yeah, also roughly unchanged. So there's not much change in the short interest, or in the interest rate that short sellers have to borrow. So I'm always saying short interest, which is actually a different metric. And not a lot of difference in the shares lent out. However, obviously, if we start with Green Wave, since it was the first on the list, the value declined. So we had a very, very stable area here, and then just with Monday, this happened, and so we are value-wise now obviously by far not compensating for the loss in value with the interest rate that we earn on our couple hundred shares. But on the other hand, also one has to say the 200, or the, how many shares do we have in GWF right now? The 400 shares we hold, if I give them, or if I make them available to be borrowed, or if I don't, it doesn't make a difference in the shorting behavior. So yeah, it doesn't change a lot. So we're going to hold that one till the bitter end. Either they go bust, or eventually we'll see a movement up. If there would be a movement up, considering the high interest rate on borrowing shares, there might be like a quick and fast movement up. If there's no movement up, then eventually the shares will turn worthless, and we only earned a couple of dollars through the lending program. Next was costs. There we now initially, so we had the assumption that it's possible that our correction already finished here and we're in the next impulse up, but also this week, or actually already this week, we got the confirmation that this is not the case, and that auto labeling is actually correct here, or likely correct, with the assumption that this is A, B, and now wave C. We see auto labeling suggests wave C will end here, which would also be the 100% target area, so where wave A and wave C are identical, which also coincides roughly with the 78.6 retracement level, which again is one of the in that case less common, but still common turnaround points for corrective patterns. So it's possible, or right now I would consider it likely that we see the stock go down into the $5 area, and then from here then basically continue our move upwards. Now I could close out the position, but I'm gonna hold this one long term. So, or I'm gonna hold this one long term-ish in quotes. Because there's also obviously, or there's never the guarantee that we hit exactly that level. And yeah, I would have to close it out now, which means realizing the loss and then basically set a pending order a little bit above the 78.6 level to re-enter again. And I think that just, I don't know, like it's, yeah, I mean, probably would be the smart move. I have to think about it. Yeah, maybe I'll think about it a little bit. So maybe it makes sense to say, okay, we'll get out here, although we take a loss here because we entered around the $10 mark, and then just re-enter here. If I'm right, that's great, and we get in cheaper, and basically assuming then that we go up from there. If I'm wrong, then yeah, like maybe we miss out. The one thing that might point against that is that here is the minimum target area for this wave C, and we already hit that one, so it's, yeah, I don't think it's likely because we also need 5 waves down here, and I think the order labeling here might be onto something with the assumption of 1, 2, 3, but it's possible, or possible that we already finished the correction in that area on that level. It's the 61.8 retracement as well as the minimum target for this wave C, and then we go up from here. So in that case, selling out or closing out here would mean realizing a loss and then not being able to enter back in again. Yeah, I'll think about it at least till tomorrow, probably a little bit longer, and then I'll make a decision if maybe we'll get out and try to re-enter here, or if we just hold it through. So, and then the last one on the stock yield enhancement program list was SunPower, where currently we continue our journey down. We can actually add the auto labeling just to make things look worse. And auto label assumes that this is wave 1, 2, and then here we have the next 1, 2, potentially 3, 4, and then 5. So we'll see if the pattern ever ends. I mean, the company had a lot of bad announcements and news, and yeah, position is not big enough for me to I don't know, to realize the loss, to be honest. Either they turn it around or it just goes past. Either way, gonna survive. So that's like, yeah, that's like the risk with those small, in quotes, gamble positions that have, if you're right, huge payoffs, and if you're wrong, you just, yeah, lose whatever money you put in. Time will tell, but obviously what looked promising in this area, still based on a potential Elliott Wave pattern, doesn't look so promising here anymore. Yeah, so things change relatively quick, especially in stocks like that one. And with that, we have that covered. Now, where do we have? SPY is moving up. We are now in the area where technically, if I'd have available funds, I probably would start to buy puts, because I believe that this might be wave 1. It's a tricky situation as well. So we have on one hand the possibility that this is just a correction, which would be wave A, B, and C. And we see when we add the maximum target for wave C, again, not the guaranteed or so, but the maximum, that's exactly where we turn around, which would make this, again, A, B, C. And from here, we get the next 5 waves up, where potentially this could be the next 1, 2, 3, 4, 5. On the other hand, this could be wave 1, wave 2, and now we have the next wave 1, 2. Let's get rid of this one for now. Move that one further back, and then add a retracement here. And then switch to the hourly chart for a change. One, two, three, four. Then maybe. Maybe. So if this is an impulse down and this is indeed just the ABC correction, then I'd say, yeah, I'd probably buy puts now-ish. Although then we need here 1, 2, 3, 4. That spike here is a little. 1 second. 16th of July. Okay, so auto labeling thinks that this is a flat correction. So with this being wave A that subdivides in ABC, now followed by another wave ABC to finish wave B, and then followed by wave C that we don't see here. Will we get to see it? No, we don't see it. Okay, so we set the zoom. The tricky part here is to properly identify where here, if this is indeed not the next impulse wave up, but just a correction in between, where wave A finishes. Hourly chart. I mean, up until here, I tend to agree. Either way, so let's say between 530 and 545 would be the area where I'd consider getting put option if I would have available funds right now and not everything locked in other positions for a potential further wave down. Obviously not something where I would bet the house on it, because if I'm wrong and this is the next impulse wave up, then obviously the options will expire worthless. But if this is indeed 1, 2, and then the next 1, 2 till here somewhere, then the next wave 3 down should be relatively brutal and the option should pay out hugely. Now, if we then from here move on to the NASDAQ, if we get a chart, let's try switch to daily. There, I think we yesterday got at least a chart. Cannot switch to daily. Let's give it a moment. There we go. So we look on the 3-day chart based on this movement. Yeah, shouldn't have zoomed. Sorry for that. Dum, dum, dum. Well, yeah, so while it's loading, so if we look at this, then we either are correcting the wave pattern that's from here to up here, and then we would already need to have some ABC pattern done to potentially go further, but then that pattern is a little too short. So I think that correction here is not done yet. Or we are correcting this entire wave pattern, or we are even correcting a bigger wave pattern. But if we're correcting this entire wave pattern and one target area based on my, in quotes, like how to say, like visual estimates, so without having the retracements on the chart, would actually be in the 16,000 to 14,000 area, so that we get A, B, and C down. If it finishes loading here, then maybe we can chart it. If not, then we can. We can see, however, even with the naked eye, that basically because we went down till here, so the 17,300 mark or so, that the moment we would go below this here, it clearly is not just correcting this part anymore, but it would be then obvious that we're correcting at least this or the entire wave pattern or even the bigger wave pattern. And I think we're gonna at least correct this, which means, again, there should be further downside to come. Even if that is wave A, and now, so already wave A finished, we get wave B, and then we get wave C. We again would talk about the 16,000 area. So here again, I think that up on a decent upwards movement. If the loading finishes, maybe we can look at it. Yeah, getting put options to bet on the downwards momentum. Yeah, it's just what has the highest probability of paying off because the movement should be quite far. Now, the question is, however, about the expiration date, because if wave A is like a drastic move, and then we have wave B, and then wave C might be a like not such a drastic move, but a slower move, or vice versa. Like for example, here we have also initially a slower move. Wave B is likely till here, so A, B, C, and then wave C is more drastic or faster in the decline. So it doesn't always have to be like this, but it's just something that is to consider. Since wave A went relatively fast, wave B might go however it wants, doesn't matter, and then wave C might also go a little bit slower, which means we would have to consider an expiration date that's a little bit further out in the future. Now, it's not loading here, so we don't get to label it, but you get the idea. So basically just attach a Fibonacci retracement here for this, first for this thing here, and you'll see the 38.2, 50, 61.8 retracement levels, which give you an idea where the correction might finish. If it's then just correcting this part, and then draw one for this entire thing here, and you get an idea where it should go or might go if it's not finished yet. Now, again, I think that this is just the beginning. We might get some recovery for wave B. We might even get another push down because this wave A might not be finished yet fully, especially since this is now a 3-day chart. Then we get a recovery, and then we get our wave C down. However, I would not be surprised if we navigate into the area of around the set, like roughly without having the Fibonacci's on the chart, so 14,000 to 16,000. So basically the area of wave 4 of the previous wave of the lower degree. So this probably is something like 1, 2, 3, 4, and now wave 5. And then here we are correcting that whole thing. And with that done, we can take a quick glimpse at NVIDIA. Where we can already see my assumption that this is wave 1, wave 2, and we're now in wave 3 down, and wave 3 should take us further. It's also, however, possible for those of you that missed previous episodes that this is wave A down. Here we have wave B, and our wave C goes to the maximum target of 161.8, and that now this here is basically the end of this correction, so that this is only a correction A, B, C, and from here we're going further up. However, I don't think that's the case. I think that this is just 1, 2, 3. Now we get 4, 5, or 3, not even, yeah, 3 might be finished at 161.8, but we get 4, 5 down, and then from there we get wave B, and then we get wave C down, simply because there is so much to correct. I think we might be correcting this entire pattern here, so from up here to down here, or even further down. So even further down, so let's pick this point here, yeah. And then we can see that the 38.2 retracement level would be at 89.24. Now again, it's possible that this is ABC and we're going up further. However, I consider it more likely that this is only the beginning. 1, 2, 3, 4, 5. And then basically ABC, and then wave C for A, B, C down. But yeah, so we'll have to wait and see. Potential entries for betting against it would be then obviously once we have basically 4, 5, and then either then going long temporarily in wave B, or waiting for wave B to finish and then going long for going short for wave C, so through put. And that's that. Now, what else do we have on the list? Immersion. There we have our, so using Kennedy channeling technique, potentially our base channel. We have the breakout, our acceleration channel. Now we broke through that on the bottom, which would confirm a wave 4, and we touched the top of the base channel. Very often the top or the median of the base channel will serve as the turnaround point. So it's possible that in immersion we already reached the bottom, so that this here is ABC, and that we now will get wave 5. If that were the case, so we can remove this and instead add our deceleration trend line. Using Kennedy channeling technique, unfortunately, we'll only have confirmation if we break through here. So that's if we use Kennedy channeling technique. But then our profit target would be based on this channel here. So there should be some upside. So that's at least my assumption here based on the daily chart, that we likely have wave 1, wave 2, 1, 2, 3, 4, 5, finished for wave 3, now wave 4 down. And yeah, we also see that while we don't hit the 2618 extension level, we got fairly close to the 2382 extension level. Again, those are the most common areas for wave 3 to terminate and then turn around into wave 4. I'm not fully happy with it because we don't touch it, we just get relatively close. But it's what we have, and considering the correction down here, we are clearly correcting into the area of wave 4 of the previous impulse wave of a lower degree. So if we have here 1, 2, 3, 4, that's the area of wave 4. And we clearly correct into that area, which would support the idea that this is a full impulse, and that's the correction that corrects this prior impulse. And so that from here, potentially, we might get the next 1, 2, 3, 4, 5 to finish wave 5, which as said should terminate at least at the median. Because wave 5 doesn't always have to make a new high, it just has to recover at least 61.8% of what wave 4 lost, or up to the top line, or there are also things or patterns where we have a throwover. Yeah. So, but it's going to take time because we're again looking at the daily chart. And now then known is still ticking slightly down, or no lapse, yeah, not known, but no lapse. Still ticking slightly down, but we're still within the area that we talked about last time, that if we look at that whole thing, as long as we are above the 27 cents, it is the possibility that we might have finished the wave 2 here, that finished basically in the area of the 78.6 retracement and the 161.8 extension level for wave C. And then from here that we have the next wave 1, 2. Yeah, so remains to be seen over the next couple of days and weeks. But so far, pattern still holds up, so we'll just have to wait and see. And I think with that, we've covered everything. The Nasdaq, I think we also, yeah, no, did we? Oh, no. No, that was the NDX, but the MNQ, yeah, we covered the Micro E Nasdaq, but so technically we covered it, so that's good. So with that, we have everything covered. And since there are no questions in the chat or things to look at, I'm actually going to call it a day, because I still have a bunch of other things on my to-do list. I hope you were able to take something away from this live stream. And yeah, if so, don't forget, like, subscribe, enable notifications so you get notified about the future streams. And with that, I'm going to say thanks for tuning in and hopefully see you in one of my other streams. Till then, bye-bye. So Olga, it's my pleasure. Thank you for taking the time in your day to actually visit and interact. Yeah. So have a great day and see you, and hopefully the rest of you guys